What if I told you the IRS is already auditing your tax return right now? No, you didn't get that dreaded letter in the mail. It's happening silently, behind the scenes, with every return you file. It's all thanks to a little-known system called the Discriminant Function, DIF score. Curious about what this means for you? Here's where it gets interesting. The DIF score is the IRS's secret weapon for flagging potential issues in your tax return. Think of it as a silent judge scrutinizing every detail you report. And the stakes? They're higher than you might think. A high DIF score could put you in the IRS's crosshairs, potentially leading to a full-blown audit. But a low score? That might just let you fly under the radar. Want to know how to influence this score in your favor? We've got you covered. But first, let's address the burning question. Is your return setting off alarm bells at the IRS right now? You might think you're safe from an audit if you're not a millionaire. But what if I told you the IRS has a hidden scoring system that could flag your return regardless of your income? It's like a credit score for your taxes, and it might be working against you right now. Let's crack the code on how the IRS really evaluates your tax return. It all comes down to two key scores: the Discriminant Function, DIF score, and the Unreported Income Diff, UIDIF score. These aren't just random numbers, they're sophisticated metrics that determine whether your return raises any red flags. Think of the DIF score as a financial fingerprint. It compares your return to similar ones, looking for anything out of the ordinary. High deductions? Unusual income patterns? The DIF score picks up on these nuances. It's not about how much you earn, but how your financial picture compares to what the IRS expects. But that's not all. The UIDIF score takes things a step further. It's specifically designed to sniff out potential unreported income. Did you forget to mention that side gig? The UIDIF score might catch it. This adds another layer of scrutiny to your return, making it even more important to report all your income sources accurately. Here's where it gets interesting. Understanding these scores can give you valuable insights into how the IRS views your return. It's like having a peek behind the curtain. With this knowledge, you can make more informed decisions when filing your taxes. You're not just throwing darts in the dark anymore, you're working with a clearer picture of what the IRS is looking for. But don't panic if you think your scores might be high. Remember, these scores don't automatically mean you've done anything wrong. They're just indicators that help the IRS decide which returns might need a closer look. It's all based on historical data and complex algorithms, not personal judgments. So, what can you do with this information? For starters, it emphasizes the importance of accuracy and consistency in your tax returns. Every number you report, every deduction you claim, they all contribute to your scores. It's about painting a clear, honest picture of your financial situation. Now that you understand how the IRS scores your return, let's flip the script. What if there were ways to make your tax return less interesting to the IRS? Not by hiding anything, but by being even more transparent. Sounds counterintuitive, right? Well, it's true. There are legitimate strategies you can use to lower your DIF score and stay off the IRS's radar. And the best part? It's all about clarity and honesty. Let's start with the basics. Double-check your math. It sounds simple, but mistakes can raise red flags. The IRS isn't just looking for dishonesty, they're also on the hunt for errors. A clean, accurate return is your first line of defense. Next up, report all your income sources. Every single one. That side gig you did last summer? Include it. The few bucks you made selling stuff online? Yep, that too. The IRS has ways of finding out about unreported income, and it's a surefire way to increase your DIF score. Now let's talk deductions. It's tempting to claim every possible deduction, but be careful. Suspicious or overly large deductions can set off alarms. Stick to legitimate deductions you can back up with solid documentation. Speaking of documentation, clear record keeping is your best friend. If you do end up being selected for an audit, good records can turn a potentially stressful situation into a breeze. Keep those receipts, folks. Here's a key point many people overlook: consistency. The IRS loves consistency. If your financial situation changes drastically from one year to the next without explanation, it could raise eyebrows. If you have significant changes, be prepared to explain them. Think of your tax return as your financial story. You want it to be clear, consistent, and compelling. The goal isn't to hide anything from the IRS, it's to present such a clear picture that they have no reason to dig deeper. Remember, A low DIF score doesn't mean you're cheating the system. It means you're presenting an honest, straightforward financial picture that doesn't raise unnecessary questions. It's about making your return as boring as possible to the IRS's algorithms. By applying these strategies, you're not just randomly filling out forms, you're actively managing how the IRS perceives your financial situation. It's like having a superpower in the world of taxes. Let's talk about the power of knowledge when it comes to your taxes. Understanding the DIFE score isn't just about avoiding audits, it's about taking control of your financial story. Here's the thing, most honest taxpayers have nothing to fear. The IRS itself says that the overwhelming majority of taxpayers file returns and make payments timely and accurately. But awareness is your superpower. Knowing how the IRS views your return lets you present your finances in the clearest, most compelling way possible. It's not about hiding anything, it's about being so transparent that the IRS has no reason to dig deeper. Remember, you have rights during any audit process, including the right to professional treatment and representation. So next time you file, think of it this way. You're not just filling out forms. You're telling your financial story to the IRS. Make it clear, consistent, and compelling.